Myself Vaibhav. I welcome all of you to today's session of Market Movers. We are seeing volatile moves in the USDJPY since the release of FOMC meeting minutes of July yesterday. The Federal Reserve's committee members have started to discuss about how to end, how and when to start the gradual unwinding of the asset purchase program. The interest rate hike might be a couple of years away, but the pace of purchase of securities by Fed is going to be lowered as US economy is doing well. In coming months, the need for the support will reduce further and it will be important for the Fed to wean off US economy from the steroids to avoid overheating. This is expected to help the USD in bullish momentum. Even though USDJPY jumped lower after the release of FOMC meeting minutes, I think the outlook for USDJPY is now more favorable for upward momentum in coming few days. In this session of Market Movers, we will see what are the levels which can help us optimize the trades in case we decide to go long for USDJPY. On the data front, the day started with the employment numbers for Australia. The job market of Australia is doing better than expected with new jobs being created, which has brought the unemployment rate down to 4.6% for the month of July from 4.9% earlier. Though most of the new jobs created are of part-time nature, for the US, the initial jobless claims are down to 348,000 for the week ended 14th of August. This is the new pandemic low, which shows the resilience of economic recovery in the United States, even in face of concerns emerging because of the rise of the coronavirus infections resulting from the Delta variant. Now let's shift our attention to the technical side. We will consider the outlook for USD JPY to be followed by the technical analysis for the gold. Let's start with the USD JPY's technical outlook. This is the daily time frame chart, and here you can observe how volatile the USD JPY has been in recent past. Even in today's session, the moves have been fairly sharp on the both sides. And now that it is holding well closer to the lower side, I think it will be important for the USD/JPY bulls to see that USD/JPY is able to hold above 109.5 in near term, and this is the level which can make or break the case for going long in the USD/JPY in near term. We have this consolidation phase unfolding in USD/JPY, so you can say that right now the USD/JPY is right in the middle of these two key levels. The support on the lower side closer to 108.7 and resistance on the higher side closer to 110.7. And here we have the USD/JPY trading 100 pips from both these key levels right in the middle, and that is, I think, causing some confusion, and we have these topsy-turvy moves, but we can always take the help of some key levels and see what are the levels which we can target for the new entry. If we consider the regression curve, it has started to incline on the higher side, and yesterday's jump on the higher side above 110 was a crucial development, but it faltered after getting closer to this central pivot point, which acted as a major resistance, and we saw USD/JPY giving up most of the gains. One of the contributing factor has also been the risk of sentiments prevalent in the market. We are seeing quite a sell-off in the equities which started after the release of FOMC meeting minutes yesterday. We saw the Dow closing lower, and as I remember, I had talked about the possibility of shorting the Dow and its decline below 35,000. And if any of you have had gone in for that trade, you might be sitting in pretty good amount of profit. So that is also one of the factor which is weighing on the USD/JPY's moves. And if we look at it from technical points, technical perspective, we do have these resistance in place. And in near term, the key level to watch out on lower side is going to be this immediate swing low. And if we are going for the entry anywhere in the price band near 109.5, I think this is the price zone which can be utilized as a stop loss level if we want to utilize this price formation. And here we have these two SMAs converging closer to the 109.6. We have 50 SMA crossing above 200 SMA. That gives us some confidence, some boost in the confidence for going long in the USDJPY. But we do have to be mindful that USDJPY will need to consolidate while holding above these immediate consolidation lows. That's why I said the 109.5 levels are going to be important enough. And if we have extended consolidation with these levels being respected, we will have more reasons to believe in the continuity of this near-term bullish momentum. And in that case, we can again expect the USDJPY to cross above these 110, and this time around we can expect it to go all the distance towards 110.7. So it will be interesting to see how things shape up in coming days. Now let's see what's happening in the gold. Gold has been trading in a very narrow range for last 2 to 3 days. Today also the range is quite narrow. We don't really have much movement in the gold, and it has been consolidating closer to these prior consolidation lows, and I think this is the level which is acting as a near-term resistance. The gold has not been able to cross above the price level of US dollar 1800 per ounce, and in near term this is the price level which we can utilize as a critical marker. As long as gold remains below it, we can take our chances to go short in the gold with the expectations of a further move on the lower side towards the 1750 USD per ounce levels at the minimum. We will have to wait for a breakout on the lower side. We have seen the gold consolidating in a narrow range above this first support of this month's pivot point series. After this sharp moves, the gold has gone into a consolidation phase, and on the higher side, it does have a strong resistance in place. We have this central pivot point right at around 1800 USD per ounce, and on the lower side, we have this immediate support also, and that's where the gold has found support in near term, but it hasn't gained much, and it looks like if it is not able to cross and hold above these resistance on the higher side, we can pretty much expect this momentum to continue, and in course of time we are likely to see a breakout on the lower side. As and when that happens, we can short it with the possibility of a move toward the second support of this month's pivot point series. We have both these technical parameters pointing on the lower side. The regression curve remains tilted on the lower side with the formation of a lower high and a lower low. And if we have to pinpoint the exact entry point, I think the scalping kinds of trades can be taken even now, right at the levels closer to this USD 1790, while keeping a stop loss little above the prior swing high. I think a stop loss anywhere closer to the 1800 level should help, and that will entail the risk of around half a percentage point. And on the lower side, we can expect a move towards the prior swing low or even below that. This consolidation low can also be taken as a near term target that is going to get us the risk reward ratio of 1 is to 2. We have seen the strength in the dollar, and that is likely to cast an impact on the gold's near term outlook. So we can target for new shorting opportunities in the gold. So that's my take looking at the current price formation of the gold. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. For further coverage of the market developments, you can follow us and the Ducoscopy Analytics page. For starting to trade, the J4X platform is going to provide a fabulous interface to the market. We are also available on the social media. You can follow our Facebook page. That's it for the day. Thank you all for joining in. Have a fabulous day ahead. Goodbye.